Let me look at a single best chart right now with Dean Curnutt. You must look at the VIX, but it's a different, more mathy look at the VIX today, where we can comment on the center tendency that we're at right now. Let's call it a single best chart. The agony of February of a year ago now, with 3 standard deviations out. Huge move. This is a 4 standard deviation chart. October there with a white circle, and down we go into a December agony, and then the return back to good and normal times right now. We're center tendency now, but do you trust it?
For the time being, I do. I actually think that the lack of trading volume and what I hear from clients is telling us that we're in a wait-and-see mode, at least for now. I look at 2018 as providing some evidence that the late cycle vulnerabilities that tend to build up in markets, and especially this cycle, which was low vol and low rates for a long time, it tends to create these fragilities in markets. So you saw it in Feb 18 and certainly in the fourth quarter. I think it's symptomatic of more to come, but I think for now, right now, markets are in a little bit of a wait.
Well, let me ask you a David Harrell question. He was on earlier, completely different than you, a value investor. Does a mathy quant guy like you want to own the beaten up value stocks, or do you want to own the stocks that went down a little itty bitty, but they're growthiness and they may bounce back?
It's not really our specialty. I
understand that.
Yeah, I would say value over a long time.
No one's watching. We're among friends.
Exactly. No, over a long time, value will do well. That's what the data show. 2018 value did pretty poorly. Yeah. So if you have a very long time horizon, I think that there's opportunity. Of course, markets and investors in things like hedge funds don't really enable a long time horizon. So it's difficult to sit and kind of wait when investors are clamoring for returns here and now.